from Jan 1, the new regime under NFSA or other free food grains via PDS, that will get operationalized from Jan 1 onwards the entire calendar year.
Controlling stake, that's what after the 26% open offer they will launch.
The first opening is absolutely quiet. In fact, the sensex is already in the red.
I think in January, still occupied and volatile.
Of late, the liquidity situation, both from domestics as well as the foreign flows, both have sort of softened coincidentally.
The Nifty and the Sensex currently up close to about 0.8%.
Now, CBI has made the third arrest in the case. Venugopal Dhoot of Videocon Group of Companies is also arrested.
Funds have declined massively by about 11.2% month on month, which is the highest decline rate that you are seeing in last 12 months or even more.
To build the third largest CDMO and API company in India.
Nifty is up 200 points as we speak.
It's a bounce, and the bounce is holding so far as we begin the last hour of trade. You're with us here on Closing Bell. With me, my colleagues Mangalam and Rima. Hi, guys. Good afternoon.
Hi.
So stability is the name of the game, and so far it's been quite stable. Absent all of the intraday big swings that one has become accustomed to over the last fortnight, the market, in the initial, I think, 30 minutes, 40 minutes, saw a little bit of swing up and down. But after that, really nothing at all. You just have to look at the Nifty intraday chart, which will tell you that. So it's a very decent bounce, steady bounce, which we have on our hands after absolutely a washout and a walloping that the market got on Friday and, of course, on Thursday as well. Friday felt much worse than Thursday, but 2 days of absolute carnage. Now, where from here, right? The Friday's high of 18,050 becomes the first kind of resistance. We're very close to it. 18,028 or so is where we are at. So let's see if we're able to get past it. If we are able to and hold above that level, then, as I said in the morning, you get two sort of retracement levels of the fall from the 14th of December highs to Friday's low. Those are basically 7 trading sessions where the market fell sharply. And the two retracements of the 38 and the 50% retracement, 18,130 and 18,240. Those are two levels to watch once we get past, another 30, 40 points higher. It'll be a good outcome if you close a little bit higher than Friday's high and then kind of take it from there. Supports should come around the 17,780 level. We can talk more about that a little later. Mid caps and small caps are seeing a forceful comeback. And I think this is what is giving a fair bit of encouragement because those are parts of the market which fell 4%, 5% respectively. And at least half, if not 60, 65% of those losses are being recouped with the bounces we are seeing. Advanced decline holding very, very well with about 7 advances to 1 decline at this point in time. Of course, you could say that the market here, you could complain about volumes. You could say, well, the market here is trading in a bit of a vacuum because global markets are all shut, etc. But it is what it is. And for now, this is a decent looking screen after Friday's carnage. Rima, hi.
Hi, quite the reversal, right, on the trading screen. It's the Nifty PSU Banking Index, which is leading from the front. That index has gained close to about 6%. So currently, as we speak, the Nifty PSU Index has gained close to 240 points, which means it's recovered about 45% of last week's fall. Last week, the Nifty PSU Banking Index saw a decline of 550 points, and of that, 240 points has been reclaimed in today's trade. And so many stocks, right, ferocious sell-off last week, but in just one day, many of them have managed to erase all of last week's losses. So just take a look at a couple of stocks, right, that have picked. Easy Trip. This was a stock which was impacted as COVID concerns rose because this is, the Ease My Trip, right, the travel portal. So it was directly impacted, or it was seen as a direct, negative impact on account of what's happening globally and the possibility of travel restrictions. The stock fell 18% last week, but today it's back to the levels where it was 6 days ago. J&K Bank is in fact higher now. It lost 17% last week. It's gained 18% since trading at higher levels. FACT is practically back to where it was. Only in a couple of PSU names, like PSU banking names like IOB, etc., which had a 20% fall, they've managed to recover close to about 50%. But ferocious sell-off yesterday, and the rebound has been pretty spectacular as well. The question is, will it sustain from here on? Mangalam, hi.
Hi, good afternoon, guys. You know, it looks like a much better screen in today's trading session. And what's interesting is, like Prashant said, it's a clean up move that we've seen. At any given point in time, if one went long, they would be making money on the indices today, and a lot of stocks as well. Portfolios would be feeling much better as well. I mean, the mid-cap index fell about 1,200 points on Friday, 850 points, so roughly 70% of Friday's loss has been recouped in today's trading session itself. For most part of the day, the Nifty was, facing some sort of resistance around that 18,000 mark. Once that has been taken out, a swift 40-point up move over that 18,000 mark has also been witnessed. What's interesting is whether this sustains this up move or not is, immaterial. The good part is that bulls now get some confidence, which is reflected in the kind of put writing that we've seen. For most part of the trading session, we didn't see a lot of writing at the 18,000 put, but now in just the last half an hour or so, the 18,000 put has seen a fair amount of writing, almost 54 lakh shares in open interest for a premium of 80 odd rupees. 17,800 and 17,900 puts have been active all through today's trading session, and the 18,000 call writers have now moved higher, the bears that is, and they are looking at the 18,100 call. I'm looking at that contract with the 18,000 call, which had about 15-16 lakh shares added in open interest. That's come down to just around 5 lakh shares in open interest, and 18,100 call has seen a lot more addition. So that's telling you that resistances are moving higher, supports moving higher, the band as a whole has moved higher, and that's what today's trading session has done. Interestingly, the Nifty put-call ratio, which was at 0.72 before start of trade, indicated that there could be a bit of a bounce, and a bounce that there is. We've seen the put-call ratio move to around 0.92 as well. The Nifty is above the 100-day moving average of 17,839, so that is an important support level now. And Nifty Bank is above the 50-day moving average of 42,150. On the way down, these levels were cut by the Nifty like knife through butter. On the way up, will it be as easy to take these levels out or not is the big question. But the important part is today's move will give a lot of support and confidence to bulls. And the only monitorable now will be the way the India VIX performs, because all of last week it was up 15% went over that 16 mark as well. Today it's down about 1.5%, but for further sustained up moves, we'll have to see the India VIX decline as well.
Thank you for that. The Nifty's climbed its way back to 18,050. So Friday's intraday high of 1850 has been hit now with the 240-point up move that's currently on our hands right now. Mid-caps up 2.8%. Let's find out with our experts whether this is sustainable, and there is more to go. So here's what we have for you on Closing Bell today. Stocks like Poonawalla Fincorp and Gujarat Fluorochemicals are higher in trade on the back of fresh brokerage calls. Details on reports lined up next. Hemang Jani and Siddharth Bhamre will be joining in for some fundamental stock analysis. We'll also discuss market technicals with Mitesh Thakkar, and we'll discuss top sectoral bets and portfolio calls with Neil Bahal of Nigen Capital PMS.
Okay, let's get in Mitesh Thakkar to run us through what he would want you to do in the last hour. Mitesh, good afternoon. So far holding, right? I mean, no whiplash, at least so far. They may yet come, but what would you do now?
Prashant, in fact, earlier in the day, we were of the opinion that around 18,050 will explore shorts. But as you rightly said, there's no sign of weaknesses yet. So I'm just waiting it out, I think. But, in case we again start tapering off, let's say start getting below 18,000, then I'll go short with today's high as the stop loss. Else, I think, we'll wait it out, this bounce back. In the best case scenario, might even test 18,180, 18,200 levels. So that's the kind of upside outlook I have. On the stock side, I would say, I have a buy on State Bank of India. That's something which is reversed very nicely from the oversold levels. So keep a stop at 590 for targets of 620. And Usha Martin is the other one. That's a buy. Keep a stop at about levels of 152 here and a target of 185.
I take your point completely on Usha, State Bank of India, 4.5% up move out there. In fact, it's been a day full of financials, in terms of an up move. Union Bank up 14%, Federal Bank up 8%, PNB up 7.5%. I mean, among the top 10 FNO gainers, we have 6 from the financial space itself. And even in the non-FNO space, cash market stocks, Poonawalla Fincorp has definitely been, the stock of today's trading session. There's been a brokerage initiation as well. Motilal Oswal is positive on the stock. Abhishek joins in. Abhishek, what is their rationale?
Well, Manglam, Motilal Oswal has initiated on Poonawalla Fincorp, wherein they have given a buy recommendation and a target price of 350 per share, which is perhaps the all-time high that the stock had already hit earlier. So they say that, scalability to be aided by the model of direct digital and partnership, that is DDP model that the company is following. So the company has partnered with various fintechs as well as consumer techs, which will augur well for loan growth going ahead. So there is an upgrade in credit ratings. Remember that CARE had recently upgraded the ratings on the stock, and which along with that, there is significant improvement that you are seeing in liability franchise as well. So conservative portfolio quadrants to enable best in class asset quality going ahead. They believe that the consumer and small business finance are the segments targeted by PFL. So recently, the housing portfolio is being sold to, another TPG, which was released to the exchanges earlier. So Motilal Oswal estimates AUM CAGR of about 37%, while PAT CAGR of about 65% over FY22 to 25. So they estimate the ROA to increase to 4.8% and ROE of about 12% by FY25, which means a low leverage of just 2.5 times, which augurs well for the company. Back to you.
All right, that's a big move on Poonawalla. Thanks very much, Abhishek, for that. Hemang Jani of Motilal Oswal Financial Services is with us. Hemang, good to have you here. Thank you very much. Comment on the market, if you will, the big reversal we have on our hands. What kind of sentiment is out there, at your office, if someone is in office? And of course, if you have a view on Poonawalla.
Yeah, good afternoon, Prashant. I think we all were waiting for the Santa rally, and I think maybe because of climate change, it's coming in a bit later. But I think it's definitely a big relief for the markets, because as we enter this holiday season, because of the sharp cut that we had seen earlier, the sentiment was not that good. And our sense is that today most of the markets are shut. This entire rally, whether it sustains or no, we will have a slightly better clarity once the other markets open up. But given that we have not had any major negatives in terms of, I think the COVID cases or other things, we do not see a case for a significant or a deep correction in the markets. So would be rather comfortable buying into the dips that we are seeing at this point.
Hemang, afternoon. You know what I heard over the weekend when I was chatting with a few market people was that everyone was anticipating that Santa rally, and there was a lot of leverage built in the markets on the back of this expectations, because historically we've always done well in the second half of December. But because that didn't happen, things came to a boil on Friday. A lot of margin calls got triggered, and a lot of that leverage, that froth in the market was unwound very rapidly. Can you give us, is this something that happened? What has been your experience about what happened on Friday? And what's the positioning now in the market?
So yes, Rima, I think typically in the December month, the volumes are on a lower side, and certain high beta names had actually corrected almost about 15 to as high as about 30%. And I do not think that the leverage in the system is too high at this point of time, whether it is margin trading or the intraday leverage, because of the kind of norms which are there put in place by SEBI. The leverage is on a lower side, but if you see a big cut, then typically if the positions are concentrated, the price impact can be very high, and which is what we have seen in the last 2 or 3 days. But I am not reading too much into this. I think overall, people will focus more on what's really happening in terms of the quarterly numbers and how the global markets shape up. So not worried too much about this fall at this point.
Hemang, you guys are alluding the Santa rally, delayed Santa rally to climate change. I would suggest that maybe it is because the traffic under the Santa Cruz bridge, because of which, Santa delayed its move towards BKC, where the NSE is, and, the Lal Street in Bombay. But, as we speak, a big move is what we're witnessing on the Nifty. We started the show where the Nifty was just below that 18,050 mark, and now as we speak, it's only gained further, and that's primarily on account of the Nifty Bank. Nifty Bank, 1,100 points on that one, and led higher by all these pockets which had strength. HDFC Bank The biggest weight on the index has moved to the high point of trade. ICICI Bank is also moving well. SBI, which is Mitesh's call, up around 4.5% on that counter as well. And Axis Bank is the other one. I mean, you have been talking about these pockets of strength in the private sector banks. Public sector banks have done well, saw a bit of a drubbing last week as well. But what are your thoughts on these private sector banks? I mean, a big move is what we're seeing on Axis Bank, ICICI Bank, HDFC Bank. Which one would you go with?
So, Mangalam, I think the private sector banks have been relatively resilient even during this correction that we have seen. If you see Axis Bank, it touched 52-week low and it has barely corrected about 4%. Same is the case with HDFC Bank, and we expect very strong quarter from both these names as the credit growth has picked up and the margin picture has remained quite strong. So we are quite positive on Axis Bank and HDFC Bank both, and we think that one should use this correction to definitely buy into it.
Okay, another stock that's on our radar today is Gujarat Fluorochemicals. There is an ICICI Securities note. Sonal is here with the details on that. Sonal?
Thanks a lot for that. Well, yes, ICICI Securities is bullish on Gujarat Fluorochemicals. They talk about the stock underperformance. The stock is down anywhere between 20 to 25% in last 1 and 3 months. But they say despite this fall, the fundamentals of the company remain really strong. And if we talk about valuations of the stock at current levels, they are reasonable. At PE, it is trading at 19.5 times, and as per EV to EBITDA ratio, it's trading at 13.2 times FY24 earnings. So it is one of the cheaper ones as far as the fluorination segment is concerned. Now about their fluorochemical segment, they say that market is turning favorable for integrated players, and since Gujarat Fluorochemicals is an integrated player, they will stand to benefit because they are fully backward integrated for its entire fluoropolymers business. In terms of PTFE prices, which is one of their important products, prices have increased to the tune of 40% to 960 rupees per kg, which is so far in FY23 versus what we saw in FY22. Spreads, however, have not materially seen an increase. This is because of higher power costs. And Gujarat Fluoro, being the sole manufacturer of PTFE in India, tends to benefit at least from some increase in the spreads that this particular product has seen. Export revenues from new fluoropolymers has increased to 450 crore rupees so far in FY23 versus 100 crores in FY20. And this is a tailwind for the company, and they remain bullish on the stock as well.
Thank you very much for that, Hemang. Yeah, you want it?
PTFE. Sonal?
This is really long, Prashant. I will actually have to take it offline.
It's called polytetrafluoroethylene.
Yes.
I mean, this is after some mono something on Friday, right? So, okay, that's good. Go on, Rima.
All right. Hemang, do you look at Gujarat Fluoro?
Rima, no, the stock is not under coverage,
okay.
So no from our side.
All right. Could you give our viewers some ideas? Where is it that you see some strength? Because clearly things have gotten very volatile. So relatively, where is it that you foresee strength in the market?
So from both quarterly preview perspective as well as from price strength perspective, few names where we are positive on our Bharat Forge, where we also had an analyst meet with a very strong outlook for the non-automotive part of the business and a lot of stuff on the EV side. SBI Life is outperforming in the insurance space and a very strong annual premium growth there. And within the retail space, I think trend is something that we are very positive upon. Price strength wise, it is better placed, and even the quarterly numbers, we expect a very strong growth to come through. So these are some of the names where we have a positive view from a short-term perspective.
Okay, positive in the short term. 250, by the way, on the Nifty. So things are looking up and in a very sort of forceful way. I mean, actually, Friday's sell-off was very forceful, and today's recovery is it's a strong comeback. Now, we had the management of Mazgaon dock with us earlier in the morning, and this was, of course, on the back of that defense procurement order, which, I mean, for shipbuilders, it's very small. I mean, it's some 3,000 crores in which Mazgaon will participate. I mean, will put their bids for, and then they will win some from that 3,000 crore pool. The margin, if there was there was a bit negative with that large 43,000 crore order, for submarines, which Mazgaon management told us, has been deferred now. I mean, the bidding stage itself is now deferred by many months. Hemang, any thoughts? Mazgaon, Cochin Shipyard, etc. Strong moves today.
No, Prashant, really haven't looked at some of these names. So within defense, we have a liking for BEL and HAL. I think they are very well placed in terms of order book and the entire focus which is coming back onto the defense. So those are the two names that we like at this point.
Right. Hemang, last week, among the stocks that declined the most, we had a lot of these leisure stocks as well. Delta Corp, for instance, has now moved to the high point of trade. Indian Hotels is doing well as well. Trent was the other one, which is up 6%, had been a big decliner last week. There were fears of rising COVID cases, etc. That currently, looking at the prices, seem to have come undone, and we're seeing a bounce back in all of these names, typically the ones that do well in the second half of December. You have any picks from these? You guys have earlier been positive on both Trent and Indian Hotels.
Absolutely, Mangalam. I think Indian Hotel is something that we've been liking for almost a year now. And when we look at the occupancy rates and the tariff, which is happening along with the wedding season, the sense is that it's going to be very strong. Though the COVID cases in China have increased some fears, but when we interacted with the management, what is coming out very clearly is that they are not expecting anything major in terms of disruption. They are in a wait and watch mode. So any correction in names like Indian Hotels, Trent, some of the other retail companies, we would definitely be using those corrections to buy into it.
Hemang, do stay on. Need to get into a very short break. On the other side, we'll discuss some more stocks. We'll also invite Neil Bahal of Nijen Capital PMS. Welcome back. 18,070 on the Nifty. We're up 265 points, a gain of 1.5%. The mid-caps are on fire. Mid-cap index up 3%, small-cap index even more. And the advanced decline ratio has 2,600 stocks currently in the green. All the sectoral indices are in the green, barring the pharmaceutical index. And we're also snapping a 4-day losing streak with a very powerful rebound that's currently underway. We're in conversation with Hemang Jani of Motilal Oswal Financial Limited. Hemang, a couple of the other stocks that you all spoke about today, one of them is Canfin Homes, where you all have gone ahead and increased the target price. Could you tell us the rationale there?
So, Rima, I think what we are seeing in home finance is that the overall disbursement growth is extremely good. And for another maybe couple of quarters, the margin picture will remain quite good because there is a repricing of the loan, but the deposit rates have not been increased that much. So I think you will see a combination of a higher disbursals and a relatively better margin, and the valuation comfort has always been there for names like Canfin Homes, and typically ahead of the budget, some of these housing finance companies are in the limelight. So from that perspective, we do like that space.
What are your thoughts on PSU banks, Hemang, since we're talking financials? I mean, they've fallen from their 52-week highs at an index level, but today they are showing some sort of bounce back. Do you think this bounce back is, a resumption of the earlier up move, or maybe just temporary given the fall that we've seen?
So Mangalam, I think it makes more sense to be a little more selective because there was a sharp run up across the PSU banks, including the second and third tier names, and given the way they have increased the deposits, our feel is that the margin number may not look that impressive over the next couple of quarters. So we would be more selective and go with SBI or a BOB or a Can Bank, and will not go down any further when it comes to PSU banks. Overall outlook there is quite positive.
Okay, all right. Thanks very much for joining us, Hemang. Great speaking with you. Appreciate your time here on CNBC-TV18. Neil Bahal is founder and CEO of Nijen Capital PMS. He's joining us to take some questions. Neil, great to have you back on the program. Thank you very much. Good afternoon. Ferocious comeback after a ferocious sell-off last 2 days, Neil. How have you used these last 10 days or so of should I say, a bit of correction. What have you added? You've told us that you like special situations. We can talk more about that later, but how have you approached this little bit of a fall that we've had?
So, we've been adding shares through the last few days. And, as I said, there is these short-term movements, what happened on Friday or what is happening today, it really doesn't make any difference. The number to watch is India's per capita income. And that is going to increase for the next multiple years, maybe 5 years, 10 years, 15 years, 20 years. So, the more we talk to companies, I get the sense that these companies are super excited to be doing business in India. So I'm thinking like a company owner here and not a renter of stocks. I'm not too much bothered about what happens on a daily basis. So the corrections are, it doesn't matter. In the next 5 years, 7 years, 10 years, the Nifty, the sensex, the small caps, the mid caps, most of them will be very high. The job of an investor would be to, select good quality companies and keep changing the portfolio from time to time, but remain invested. Keep the SIP going, that for the larger investor base, doing the SIP is all they need to do.
Almost 900 points on the mid-cap index. Now that's one ferocious comeback. Almost 75% of Friday's losses taken away. We have Ease My Trip, which has hit the upper circuit of 20%. Poonawalla Fincorp, of course, we've been talking about it all through the day. 14% higher on that one. Prashant pointed out Mazgaon Dock Ship, now 13.5% higher on that counter, along with Garden Reach Shipbuilders. That one too is up around 13%. Big moves coming on, individual names. Neil, you said that from a long-term standpoint, of course, the macro tailwinds of India will take the stock markets higher. One's job is only to look at, decent companies in sectors which will provide that sort of leadership. What are your thoughts on the sectors that will provide the leadership over the next 5 years? What are you betting on?
So everything consumption related and everything India related. And what you want are companies which will have higher return on capital. So I would not look too much into a steel player. I'll not look at too much into an infrastructure player. I would rather look at a company, who's selling, let's say, some fans or selling some, burgers or pizzas, those kind of things where the return on capital is much more better. They don't require debt to grow further. And they have a kind of not a cyclical behavior. They have a more of a structural behavior that as the per capita income grows, these kind of good brands, they will have a growth in their earnings for 5 years and 10 years and so on. You need to have companies in the portfolio who don't need to worry about them daily. Yeah, market is down on Friday, so be it. Market is up today, so be it. You need to have companies where at the back of your mind that yes, the next 1 year, 2 years, 5 years and so on, that the earnings will keep growing. So that will all be in the consumption space where companies have a good return on capital.
Neil, afternoon. Reema here. I wanted to get your thoughts in on DFM Foods, where there was a special situation of sorts. And just for the benefit of our viewers, just to tell them what the DFM Foods special sits was. Advent International is the promoter of DFM Foods, the company which manufactures cracked corn rings. They held about a 74% stake. Advent International had bought into DFM Foods in 2019. Then 6 months ago, Advent International, the promoter of DFM Foods, said that we want to delist the company. And look at the stock price gain in the last 6 months. When the company Advent International announced its delisting plans, the stock price was close to about 200 rupees, way back in June. And after that, it rose to levels of 450. Just till 2 days back, the reverse book building to find out the delisting price, just got concluded, and the discovered price was, I think, 525. The promoters said that this price is not acceptable, and they've come out with a counter offer, which is 467. So the discovered price in the reverse book building for delisting was 525. The promoter Advent said we don't accept it, and they came out with a counter offer 467. Now the question is, will the minority shareholders accept this price, this counter offer from Advent International? Neil, was there any opportunity? Is there still an opportunity in DFM Foods, and how do you see this play out?
So this is exactly what we want to do. These kind of consumption names, when they do a special situation, they kind of give you that margin of safety in your investment book. So we had invested in this and as a disclosure, and we recently exited. Now, I think from this point of time to the delisting, I think it's in investors' interest to either accept the counter offer or just sell the shares here and not take that risk that the what if the demerger fails? If the delisting fails from this point of time, the stock may just go back to 200. So this is not a time to be cute here. And it's better to just book the profits, or else whatever the company is offering, you should take it. That's my opinion, and I could be very wrong. But
Neil, so at what price did you get into DFM Foods, and at what price did you exit? And is this should this be the playbook, right? Every time a delisting is announced, buy in as soon as the news is announced, and exit perhaps a couple of months down the line before even the price is discovered?
So it's not that every delisting may work out the way you want it to. You need to have a view on the underlying company. So we had a view on DFM and this sector, because I think in terms of revenue growth, this kind of sector will keep doing good. The 5 rupee, 10 rupee kind of snacking option sector. So we got in as soon as the delisting was announced, and we recently exited. But at this point of time, I'm not thinking that it's offering too much of that margin of safety that you want. For a 10-15% upside, you're risking potentially 30-40% on downside if the delisting fails.
Okay, Neil, tell us about what you've bought then. Let's zoom straight into what kind of what have you done in terms of specific purchases.
I was a little bit upset that the market reversed today. I was hoping that the correction continued for a little more period of time, because there is no point talking about names. The correction was headed to such a zone where most of the good stocks that we target in our watch list, which are around special situations, they were entering mouth-watering levels. So it was just a question of throwing darts at the market, and you would make money over the next 3 to 5 years. So yeah, we bought a few shares. Let's not name the shares, but again, consumption oriented. There are a lot of good things where new promoters are coming in. A lot of good things where demergers have happened, which have led to forced selling, which have gone to really mouth-watering levels. So investors just have to, if the correction would have continued, or I hope that it does continue in the next few weeks, we'll get things at such levels where you don't even need to use your mind anymore. Just buy decent companies, and you'll make money over a 3 to 5 year period.
So Piramal Pharma was one which I think you've spoken about in the past, right, Neil?
Which one, sorry?
Piramal Pharma.
Correct. Yeah. So, again, I prefer, let's not talk about names too much, but yes, we own Piramal Pharma, and according to us, it's a pretty nice company, and due to the demerger, it led to a lot of selling, right? And people thought that the demerger has, the company, that the special situation had been a failure. But on the contrary, what you want to look at is post the special situation, when this kind of sell-off happens. That's when the game really actually begins, and not where it should not be termed as a failure as such.
Okay. Can you just tell our viewers where else is there a special situation opportunity which is currently open?
So what I'll do is I'll not talk about the stocks that we own. I'll talk about things which we have no interest in, and which are, something that we are watching.
Opportunities that are there, right? Without saying whether you own it or don't, but at least tell our viewers where is it? What are the special situation opportunities which are available for them in the market?
There is one company called Vadilal Industries, for example, where the promoter is changing, and in my opinion, corporate governance is improving post the deal. And from whatever I understand, from whatever I've read from the publicly available information, this company has really changed, and numbers have started improving. And I think once the promoter change does go through, it's not yet happened, it's something that could happen. Once it goes through, this company could be a real good wealth creator. This is the kind of thing, Vadilal is a household name, and since quality had a big decline, so there's a whole market that is opened up for companies like Vadilal, and they've ventured into exports. The cyclicality from the business has gone away. Better promoters, better corporate governance. I still find the company a little bit expensive at this price. I would personally want to wait for a much more. So that's why I was saying, a little bit earlier, I was hoping that the correction continues for a few more days, so that these kind of companies we could add in our long-term portfolio. But yeah, these are the kind of things we need to focus on. The age-old brands, but in consumer space, largely debt-free companies, return on capital 25, 30, 35%, and a growth runway of many, many years. But the kicker comes from the special situation, that the new guys coming in bring better corporate governance and a better hunger for growth.
Right. Just a word on the alcohol space, if you, because you're talking about consumption and rising consumption on rising per capita income. I'm looking at Sula. It listed 3 days ago, and after a decline, an initial decline from the issue price, etc., is now finding its feet. It's up around 7.5% in today's trading session. Do you like this name? And if not this, any in the similar industry?
I mean, of course, what you said is right, per capita income and all those things. But we as a fund, we don't look at alcohol, we don't look at gambling, and we don't look at tobacco. So we have no view on Sula.
No view on Sula. Just on Vadilal, do you own it, Neil?
You're talking about Vadilal?
Vadilal.
No, we don't. So I want to talk about things that we don't own.
Okay. All right. No, got that. Because, I mean, it's already up, but it's gone up quite a bit, right? From, I think, 800 started the year to 2600. This year in 22, it's already gone up, but point taken. Neil, thank you very much for joining us. Good speaking with you. Appreciate you joining in with that perspective.
Thank you so much for your time. Season greetings to you guys.
Same to you from all of us here, Neil. Thank you. We'll take a very quick break here. We'll come back. We'll tell you what's happening in dealing rooms and, Nimesh, of course, gets us the D Street chatter as always, and we get you some more ideas from our technical experts on the other side. Stay with us.
But still holding up with good gains on the frontline indices. The Nifty Bank holding up with a gain of over 1,000 odd points. But those are also some visuals on your screen coming in. Chanda Kochar, Venugopal Dhoot, as well as Deepak Kochar being produced in a court. And this after the CBI has made a bunch of arrests over the last 3 days or so. Chanda Kochar, Deepak Kochar, as well as the latest arrest that came in today was that of Videocon chairman Venugopal Dhoot. So we'll keep getting you more details on that as and when we get updates, but those are visuals. Let's move back to the screen this time around, which is looking much more green than what it was all of last week. Nimesh, D Street chatter, what's happening? Are there more people in the dealing rooms now?
Not really, Mangalam. So that's going to be the trend for the next few days. The presence is going to only go down and down for the next few days from here. So what's happened in the market? See, again, today's pullback has to be in the context of what happened last week, right? Yes. The market looked extremely oversold, and the oversold was largely because of, margin calls getting triggered for the retail and HNI investors. It was not like the larger FIs or the DIs were net sellers. In fact, all of Thursday and Friday, when there was such a brutal sell-off, the FIs and DIs were net buyers in the market. So the dip was bought technically by the domestic investors, and what we saw the sell-off was largely a panic from retail and HN investors whole of last week. So today's a bit of a pullback from those oversold levels. Again, today the feedback is that the FI volumes will be on the lower side, but there is a bit of selective buying by the domestic mutual funds. I guess the domestic mutual fund activity will also be because of a bit of support to the NAVs towards the year end. So that will also play out in many of the mid cap and small cap in the days to come. What we are seeing is a pullback in most of the oversold stocks and sectors. So the financials are pulling back. Most of the mid cap and small caps have done well into the state. So all was looking oversold on Friday. Now it's looking a bit of a bounce back from those oversold levels. But again, technically the next level to watch would be 18,200 on the upside. I think that's going to be a very strong resistance. So that's something to watch out. But if you ask me, are we out of the woods yet? I spoke to a lot of investors over the weekend, some technical experts as well, and the feedback is maybe you're not out of the woods yet. So on the downside, 17,800 is a very important level to watch. If that's taken out, you'll see a further sell-off on not only on the indices, but on the broader markets as well. So that's the overall feedback. But from a flow perspective, the FI flows have started muting out. And whatever we're seeing is a bit of domestic support, largely in the mid-cap and small cap.
You said we're not out of the woods yet. Well, it turns out we aren't out of the woods yet. In fact, from the highs of the day, the Nifty has pulled back a good 70, 80 odd points, just barely holding on to that 18,000 mark on the index. The Nifty Bank 2 moments ago was trading over 1,000 points in terms of gains and now has curtailed its gains. In fact, HDFC Bank is corrected from the highs, HDFC Limited as well. We're seeing some bit of weakness from the highs on another heavyweight, Reliance as well. So a bunch of stocks actually selling off from the highs. The Nifty's just about holding on to that 18,000 mark. That's as far as the markets are concerned. Individual stocks, what do you have today for us?
So in terms of individual names, the first stock on my radar today is Dish TV. In the last 2 days, on Thursday and Friday, we saw a sharp sell-off on that stock as well. Marginally up in today's trade, but I believe in Dish TV, one of the leading lender is a seller in Dish TV. So that's the reason why you're seeing higher volumes for the last many days, and that's been the trend today as well. So that's the first one. The second stock is Adani Ports. Even last week there was a feedback that a couple of long-only FIs have started accumulating, and again today the feedback is there is a bit of buying back in that particular stock. So Adani Ports is seeing a bit of delivery volumes in the last many days, and some FI seems to be active around these levels. So that's the second one. And the last stock is Phenolix Cables. On a day like today, that stock is also buzzing in trade, good volumes as well, and I believe some bit of flows are back at the HNI desk in this particular stock. Remember, for Phenolix Cables and for Phenolix Industries, the big trigger is going to be the settlement between the families, and that's going to be a big trigger, which I guess markets are anticipating, which will come very soon, and hence that stock is focusing back, again focusing today's trade on behalf of volumes picking up at the HNI desk.
Okay, thank you very much for that. Let's get back to Mitesh Thakkar and find out what the trade is now. We have dropped below that 18,000 mark. So from the day's high, we've lost about 70 to 80 points. Mitesh, at 2:30 p.m., you said that you weren't convinced whether one should go short at those levels of 18,050. But we are seeing some signs of a reversal, some signs of a giving up of gains. Have you gone short?
We sold call options, purely because of the fact that today was a very strong pullback day. So not taken futures position, but yeah, I think as it started tapering off from those 18,050, 60 levels, which was my level to watch out for, I think at least selling some call options, and you have seen decent amount of premiums left for the December month as well, with this spike in the VIX happening over the last few days. So that's what we have done. On the stock side, Ultratech Cement is something which has caught my eye. I think that's a stock which had a good breakout and slightly on the hourly charts is pulling back. That's a BDST with a stop below 70.50 on the downside. And I would look at targets of roughly around 7100, 7110 for tomorrow. While BPCL is a STBT with a stop at 327 for targets of 319.
Okay, all right, Mitesh, thank you very much. 16 minutes to go for close. We'll come back to you. 180 on the Nifty. And there is I think, a bit of pullback off the pullback, right? I mean, so the high was made at 258 at about 18,085, and there is a sharp kind of fall that we are starting to see now as we get into the last few minutes. This is all post 3 p.m. Exactly post 3 p.m. that we've seen this sharp pullback on the indices. So now this is almost 70 points, 75 odd points, which is coming through on the Nifty. Let's look at the Bank Nifty as well. If you've got something similar, yeah, on the Bank Nifty as well, post exactly 3 o'clock, there is a sharp pullback that has emerged. Let's look at the mid cap indices and the small cap indices, and then we will get in Siddharth Bhamre, who is with us. A mid cap index, not so much, although it's off the highs, and we've got the small cap index, which is doing something similar, but of course lesser degree as compared to Nifty and Bank Nifty, which is much sharper. All right, Siddharth Bhamre is head of research at Religare Stockbroking. He's joining us. Siddharth, good to have you with us here. Thank you very much. If you have a view on the market near term, do share it with us. But you have 5 picks, right? Which I think you want to highlight: Maruti, Voltas, Exide, V-Guard, and Birla Soft. Let's start there. Let's start with Maruti in terms of why you like that name and how's the setup.
Yeah, so Prashant, firstly, a word on market. So last time, fortnight back we spoke and you were insisting on giving some buy calls, and we were of the opinion that market is too richly valued at this point of time. And at that point of time, there was a theme that let's invest more in mid cap and small cap because the rally is going to come there. And we were of the strong opinion that we should continue to buy what has done well rather than trying to hunt something which has not moved. And now we are talking, 800, 900 points below those levels. Nothing much has changed. Fundamentals are still positive, but positive fundamental doesn't mean that you buy at any levels. And we still remain of an opinion that this market might have some leg on the downside, and one has to be very careful in what they're choosing at this point of time. So because there has been a decent correction, now we have come out with our New Year report with 5 stocks. It's a blend of, it has a medium-term outlook, medium-term touch to it. And as you mentioned, those 5 names, Maruti is first name over there. So I think we have spoken about Maruti before. All I want to say over here is that the sales numbers are great. And the percentage of utility vehicle sale in Maruti is going higher, which obviously augurs well for the margins. And one comment I want to pass on over here is don't look at just share price. This is the lowest valuation Maruti is trading at in last 5 years. If you look at 1 year PE forward band, so price may not have corrected, but valuations are quite attractive. And this is one of the good buy at current levels. And we are anticipating that soon the stock would touch a 5-digit figure. The other names we want to highlight over here is from consumer durable space, Prashant. Now, if you remember what was happening in this market when post-lockdown, when there was this work from home theme which was going on, everybody went gung-ho on this theme, whether it's Voltas, Havells, or other names. And people spoke about how there would be huge demand and huge spending which would happen. And it did happen. But then that frenzy took valuations at very high multiples. Case in point, Voltas at one point of time was trading at more than 70 times P multiple. Now we have seen correction in prices. Now we have seen earnings catching up, and Voltas is back again into that comfortable zone of around 30-35 P 1 year forward earning. And that's the reason I believe that the downside for consumer durable names like Voltas is not very high from current levels. And we can again now see a durable growth happening both in earnings as well as stock price. So that's the reason it's buy. V-Guard is also from the same segment. And there we are seeing that, in fact, all these themes, Prashant, they are moving from not just being a consumer durable, but also into getting into home appliances where margins are higher. And that is where, margin expansion, P expansion story would come into play. Case in point, V-Guard, which has more of, South market, has acquired Sunflames, which has more of North market and more into home appliances. So these stories and numbers are now matching, and that exuberance is out. So these stocks are a decent buy at this point of time.
Right, we take your point. So just for our viewers, benefit, we'll repeat those names. Your top 5 picks, and I presume these are in the order of your preference: Maruti, Suzuki, Voltas, Exide, V-Guard, and Birlasoft. So these are the top 5 picks from Religare for 2023. But let's move away from 2023 and talk about here and now. Siddharth, you've been tracking the F&O space very closely as well. There is this jostle for 18,000 that we're looking at after the declines that we saw all of last week. A bit of a bounce back now. What are your thoughts on where the index and individual stocks go from here on?
I think there's a room for downside, as I was mentioning, not just from valuation perspective, but also from futures and options. We are seeing that FIs who started this series with 77% longs in index futures, it's down to 44%, and there is room on the downside. At the same time, we are seeing that. Let's accept the fact that today's bounce back is FIs minus and DIs plus. FIs are not there in market, DIs are playing the game, so retail is there. So I'm not reading too much into this bounce back. This bounce back probably can stretch, for a couple of days, can take you to 18,200 or so. But the overall data, the way things have been shaping up, is not very positive. Also, the other factors like, crude oil prices, yes, there is a bounce back, but we don't believe that this bounce back would sustain. Just like equity is bouncing back, crude has bounced back. We might see, further correction there. We are also not very optimistic on what's happening to dollar index. Maybe, at 103, 104, it is taking some support, but quite likely the dollar index would correct. And this again doesn't augur well for equities in short term. We are not talking about, Mangalam, that there is going to be a bear market. What I'm trying to say is, if you look at bird eye view, this market since last 1 year has done absolutely nothing. It's in a range. You need to be very smart that when you get at lower levels, take a contra bet, see where valuations are fine and go long. At 18,500 plus levels, your valuations are not supportive. FIs are not going long despite markets are going up. You don't have to be long. So I'm not saying to short this market. All I'm saying is wait for attractive levels to be in this market rather than being caught on the wrong foot.
Stay on, Siddharth. Need to get into a very short break. As we do that, listen in to K.K. Mistry, Vice Chairman and CEO of HDFC, as he speaks on the real estate sector's performance this year and the outlook in the sector for 2023.
Now, the structural demand for housing in India will always remain strong. I mean, it's not a 1 year, 3 year, 5 year, 10-year view. It's a very, very long-term view for various reasons. One is very underpenetrated market. Mortgages in India are just about 11% of GDP, which is amongst the lowest in the world. Affordability has improved a lot over time because prices have not moved up in line with the way incomes have moved up. So all in all, the outlook for the sector remains bright. The government also has been very focused on the sector by providing fiscal incentives and a variety of other things, the credit-linked subsidy scheme and so on and so forth, all of which has benefited the sector. So I would expect the growth momentum to remain strong in the years ahead. If you look at the individual loan segment, our growth has typically been between 15 and 18 or 15 to 19%. Last quarter was higher. Normal guidance is between 3.3 to 3.5. So we feel confident that spreads would remain in that band of 3.3 to 3.5%. I'm not talking of spreads, I'm talking of net interest margin. So net interest margin should remain between 3.3 and 3.5. And spreads, I think the 2.25, 2.27, 2.28, I mean, let's not get into 1 or 2 basis points here and there. 2.5 to 2.8 is typically the level of spreads we've had for a long time.
Welcome back. In conversation with Siddharth Bhamre of Religare. Siddharth, one of your recommendations for 2023 or the top picks is Voltas. And you spoke, right, that how the valuations are now attractive. In the peak of COVID, valuations were 70 times forward multiple. It's come down to a reasonable 35 times. And that's what makes you interested in Voltas. But if you look at the performance of Voltas stock price, it's languishing near its 52-week high at a time when the market is almost close to its all-time high levels. And in comparison, even say something like Blue Star is up more than 40% from its 52-week lows, while Voltas is, even today, it hit a fresh 52-week low. There is a concern about the company losing market share. So can you tie in, the fundamental concerns about loss of market share with the outlook for Voltas?
So, because there are concerns, Reema, that's the reason it is now available at 35 times, price to earnings. And of course, Blue Star has been doing well, and that's the reason market has been rewarding it. Management is cognizant of that, and that's the reason for further growth, to enhance growth, and to ensure that margins don't fall much. They have entered into a 50-50 JV with one of the home appliances company, and that would set the ball rolling going forward. At the same time, Voltas still remains market leader in AC segment. Mr. Katie just mentioned about that, how housing growth is going to continue to boom. And we believe this story, apart from what Voltas management is trying to foray into other businesses, would provide decent amount of cushion to earnings as well as stock prices, I believe, at large. See, market can behave the way it wants, but the way we are assessing things, because of the concerns which you mentioned and the corrective actions which management has taken and the way market is looking in terms of economy, housing growth and all, we believe this is a decent place to start nibbling into Voltas, and that's the reason we have this as a buy. We don't have Blue Star under our coverage, and that's the reason we are not doing any relative analysis as of now. But Voltas on a standalone basis looks good.
Okay, all right. We'll leave it there, Siddharth. Thanks very much for your time. Good speaking with you. Season's greetings if we don't speak again this year. Appreciate you joining us here on CNBC-TV18. Well, the market, by the way, is 3 minutes away from closing. We will end not at the day's high. The day's high was about 18,085. So about an 85 point drop coming in after 3 o'clock, which is meaningful. But, the moves were so large that, you're still left with 200 points after giving back, 85 points from the high point of the day. Banks, of course, the clear winner, doing much better than what the Nifty did. The Bank Nifty will sort of tell you that. PSU Bank, 7% move, 7.5% move on the Nifty PSU Bank Index. Private Bank is more kind of like a regular 2.5% move. Just humongous on the Publicis side. Mid caps and small caps, decent bounces as well after Friday's big cut. that we had. Metals is another area which saw some bounce. I mean, 2% or so on the Nifty Metals Index. Rima.
Mid-cap index outperforms handsomely. Mid-cap index up 2.8%. The advanced decline ratio had about 13 stocks in the green for 2 in the red. The big gainers are in the mid-cap banking space. Union Bank, J&K Bank, IOB locked in an upper circuit of close to about 20%. Poonawalla FinCorp, where Motilal Oswal initiated coverage, target price 350. Stock surging close to about 14.5%. Defense names, particularly Mazgaon Dock Shipyards, where we had a chat with the management, ends up with a gain of nearly 15%. So that's another big mover. An Easy Trip, it fell 20% last week. It's recouped all those losses. On the losing side, some softness seen in pharma. Pharma was, I think, the only index which closed in the red. And even on the mid-cap end, you had Morpin Laboratories, Nectar Life Sciences, Suven Pharma. Suven Pharma, of course, had the large deal. Suven Pharma opened in the green. It was up close to about 2 to 3%. But by the end of it, it slips 10% from the day's high to end down 4.5%. Mangala, are you watching anything?
Yes, a bunch of stocks actually, from the broader markets, because 6 stocks ended in the green for every stock that ended lower. We had gainers, chances are that you would have more gainers in any list that you look at in terms of screeners too. Royal Orchid was one stock which was up 17% with high volumes. You spoke about Mazgaon Dock. Look at the other shipbuilders, Garden Reach and Cochin Shipyard, both of them higher by almost 12 to 15 odd percent. Yes Bank was the other stock which was up 14 odd percent. The defense pack continued to do well today as well. An 11% up move we saw in Bharat Dynamics, and Lemon Tree Hotels was the other one which was higher by almost 10 odd percent. This over and above the moves that we saw in the usual suspects, the Delta Corp, Trends and Indian Hotels of the world. So by and large, a good recovery session for the mid-cap end of things. 862 points is where we end the mid-cap index with, which is a rough 70% recovery from the Friday declines of 1,200 points. So a good day for the bulls, off the highs, but definitely big gains is what we saw across the board, barring the pharmaceutical index, which was the only one which was in the red. With that, we wrap up on this edition of Closing Bell, but you don't go anywhere because our Monday special, Wizards of the Last Street, on the other side after this short break.